Hello traders, I want to show you how to easily make money in Forex using a very simple mobile strategy that everyone is going to understand. This should be the easiest strategy, okay? And I am the one who came up with it. Okay, I think this is good. We're going to use it. I'm the one who came up with it. Remember my very old strategy of key levels. I want to show you how I simplified that one. Remember that on a downtrend, what do? You wait for price to come and close above the previous key level, and then you take a buy, you put your stop loss there. Okay, I hope you remember that one. And then on an uptrend, you wait for price to come and close below the previous key level, and then you take a sell. Right there, you take a sell, you put your stop loss above there. Okay, and another thing, remember that if you are to take a sell right at this point, this area right here should be an area of interest, like a key level or the ninth level on the RSI. And if you are to take a buy on the bottom, right here should be an area of interest, like the 10 line level on your RSI. Okay, so that is basically the old strategy that I have, which I know that some people are still having difficulties with. Okay, so for the strategy that I'm going to be sharing today, it involves the engulfing candle. Okay, this is a bullish engulfing candle because it covers this bearish candle. Let's say this is a bearish candle and this is a bullish candle. Let me show you what this means. Let's say this is the 15-minute time frame. On the, let's say on the 1 minute time frame or on the 15 seconds time frame, you find that this small red candle right here is a trend. Is a trend like this. Okay, it's a trend like this, and then this bullish candle right here, you find that it is another trend like this. Okay, that is the bullish engulfing candle. And what this means is that price came down to this point, and then this was the previous key level. This was the previous key level. So when price came and closed above this, it gives us an opportunity to buy because price has closed above this key level, provided that this is an area of interest like the 10 line level. So you buy. That is the basics of the strategy I'm going to be sharing with you. Don't worry, you are not going to be looking at key levels. This is complicated, like the drawing you can see on the screen. I'm going to paint a very clear picture in your mind, something that is going to make your trading very simple. Okay, so the first thing that you are going to do is set up the indicators that you are going to need. Let me just remove everything so that we start afresh. Okay, you're going to have a clean chart like this. I think maybe I can even do it on the white screen. Okay, let's do it here. Let's look for a good pair like USD JPY. Okay, and then on a clean chart like this one, you are going to add, where do you go? You come to this F button, and then you are going to add the RSI, the relative strength index. You click, okay, let me come to the levels. You need level 91, level 90, level 89. Just add these levels, you copy them, and then you go back once, period 1, apply to close. Okay, and then you click done. This is what you are going to have on the RSI. Go back again, and you are going to add the moving envelope. Go to indicator window 1, and you go to envelopes. If you've been following me, you should know the settings for my moving envelopes by now. Just copy what you see on the screen and then you click done. That's it. That's all you need. Now, for you to sell, first thing, price must touch the 99 level, okay? Secondly, for you to sell, once price has touched the 99 level, you have to identify or wait for a bearish engulfing candle. So you can zoom out your screen, but if you can't clearly see, zoom in until you can see the candles so that you are able to identify a bearish engulfing candle. If you can take a very close look, this was the first bearish engulfing candle. Okay, let me just zoom in a little bit so we can be able to see. This was the first bearish engulfing candle. Okay, I'm not sure if there's another one. You can take a close look. Yes, there was another one right there, the red one. It is engulfing the previous candle, which is green. It's a bearish engulfing candle. Those are bearish engulfing candles. So anywhere at that point, you could have had a sell right after price touched the 99 level right here on the RSI. You even move it back and forth to see that it is not repainting, and this is the 15-minute time frame. Remember, I have already explained to you the importance of the engulfing candles, how that they are related to price closing above the previous key level. So it is like that. For a buy, it's just the complete opposite. Okay, once price has touched the 10-line level, what you do is wait for a bullish engulfing candle. Even though it is not a clear one, but this is a bullish engulfing candle. Where is another one? This one too, even though I wouldn't like to talk about that. This candle right there, if you combine it together with this one, those two green candles, if you combine them, they engulf the previous red candle. So that is the first bullish engulfing candle. Okay, if you know candlestick patterns, it is just like that. Let me just show you again. If you look at this candle and this candle right here, if you add them, they make one tall green candle which engulfs this red candle, and it is a bullish engulfing candle. So that would be your first entry point right there at the closure of that candle. So it's like that. You would have taken a buy trade right there. You put your stop loss below the lowest point. You put your stop loss below the lowest point and then you hold. Definitely you are going to be in profit. Risk low so that you have room for price to breathe. If price pulls back a little bit, you have room for price to breathe, and eventually price is going to go in your profit. You are going to win 90% of the time. If you are going to do this correctly, you will be very good to go. I wish you the best. This should be the easiest. Much love.